By the way, when you say, Jenny doesn't like anything, pay attention to what she does, not necessarily what she says. Without any, I don't mean that disrespectfully.
No,
I mean, look at what you just did.
Right.
Don't tell me you don't like anything. Don't tell me that you feel so bad about where this market is or where the economy is going, and then buy more Disney and Tripadvisor.
Right, but so here's the thing. I didn't say I don't like anything. I said I worry, and I said what I worry about is, is it the market corrects more and it takes everything, or is it rotation? And if it's rotation, there's a lot that I do like. And then you ask me, okay, what do you like? What I like are things that are really well priced, which are Disney and
Highly
Tripadvisor.
leveraged to the consumer and the economy.
Critical nuance there. Highly leveraged to the high-end consumer.
Disney's highly leveraged to the high-end consumer?
Yes. It's a very different consumer who goes to Disney than who shops at Dollar Tree. Right? It is.
And if Disney is
not very
leveraged
high-end.
Disney is leveraged to every consumer.
Harry, wouldn't you say that if you're looking at credit cards, okay, but if you were looking at credit cards, which I know we might talk about later, like American Express is more of the Disney customer versus, say, a Discover card that might be more of, a Dollar General.
I mean, I get the point you're making.
Okay, and so, yeah.
Are you buying, when you buy Disney, are you buying the growth story or the value story? Because to me, the growth story went away.
I'm buying, the growth story went away?
The growth story of Disney.
Okay, so
Disney was supposed to be a growth stock.
Let's say it's mean reversion to more of a historical multiple.
Okay.
Right? So you've got Disney right now trading at 17 times EPS, 17 times. EPS growth for the next 3 years expect to be 11%, 13%, 12%. That's pretty decent. Foot traffic, Goldman just put out a report, foot traffic is holding up in the U.S. parks. Summer bookings are looking really good. So there's part of the consumer that's fine. And this goes, Belsky, actually to exactly what you were saying, which is there's other areas that can do well. And that's what I think. And that's why I brought up international. International's
Jenny,
doing well.
I threw you a bone because I know you like dividend income. I think dividend income is going to be great this year.
I think it could be.
TripAdvisor. What do you have?
TripAdvisor's really unique. So that's trading at 10 times earnings. They've got the Viator business, which is growing like gangbusters. No one's paying attention to it. It's on track to eclipse the actual historical legacy TripAdvisor business. And the big thing here is that the Liberty Media overhang that overhung the shares for years is gone. Like that's fixed, or it's in the very, very short term of being fixed. So you've got a stock with about 11, 15, 22% earnings growth in the years ahead, trading at 10 times earnings. Huge free cash flow generation with a really underappreciated growing business. So you can look at those and say, hey, there's areas of value out there. And I don't mean value stocks, areas where stocks are trading at a fraction. If we look at those versus the Mag 7, you have
some of them are trading at a fraction because they're for a reason. Right.
Okay, but let's just...
Like, you better have a good summer travel season.
And it might be.
Well, there are questions of whether there will be.
But so far, and this goes to what you were saying, when you're saying there's no signs of recession, and I say yet, right? What we see still is consumer spending's holding up. The consumer's holding up. All sorts of, so far it's holding up. And I think what's making this a really hard market to deal with.
Is it holding up?
It is. Like PCE in January was still 5.5% year over year. I'm excited to see what the new numbers come out. I think, when is that, tomorrow, the next day? PCA comes out again. So I'm excited to see what those are. But this is the challenge. So when you're talking about, can the things that we were bold up coming into the year, like regulatory reform, all of those, they're going to take a long time to play out. Tax cuts. We're not even really talking about tax cuts. We're talking about extension of the current taxes. But so the positive things, I think...
Well, you're either, or you're talking about a tax hike.
Maybe, but let's presume we're not getting a tax hike. Let's presume no one out there wants to.
But we're talking about
they either get renewed or taxes go up.
One way or the other.
All right, fine. So all I'm saying is what we're in this challenging period of is like long-term outcomes and near-term excitement. And that makes it hard. So I'll just give you like another example. What I'm not buying is I'm not buying Target and I'm not buying Ford. Those both have huge dividend yields right now, are trading super cheap, and I have zero visibility because of tariffs, because of the regulatory environment on what the earnings of those really should look like.
I'm just not sure what visibility you think you have on Disney, that it makes it such a sure bet in your mind, even if you think it's cheap.
I think when you can look at what current summer bookings are now, and it's trading at a multiple that's fair relative to the broader market, relative to what else is out there, I think you've got a decent margin of safety.
I mean, it's part of
the... So that's why Joe said, are you looking for growth? And I said, no, I'm looking for valuation mean reversion.